Today we invite the Assistant Investment Manager at Aberdeen Investment Management Company is Okamura Kei. And hello Kei.
Hello.
Hi. We're glad to have you here. Then you are based in Tokyo, right?
That's correct.
Okay, then as we know that the Bank of Japan adopting negative interest rate for the first time ever in January. Yes. Then Japan became the first country in Asia to implement the negative interest rates after Denmark, Switzerland, Sweden. And currently, many investors, they want to know how to invest in the negative interest rate world.
Right. Well, first of all, thank you very much for having me. As Aberdeen, we have always been invested in a style that is that doesn't really change much, even if there is negative interest rates or even if there is quantitative or qualitative easing, which is what the BOJ has been doing for the last several years. Now, in the last 2 months, we have seen the Bank of Japan adopt negative interest rate policy. Under those circumstances, it does make the business environment for some financial institutions rather difficult, because it will squeeze the margins on its core business, which is in net interest income. We at Aberdeen have been invested in companies that will do well no matter what. Some of the names that we have in our portfolio for financial institutions is the likes of financial service that will see its funding costs fall while at the same time it maintains its rates on, say, profitable personal loans business. On the other hand, some regional banks may find some difficulties because they generate quite a bit of their revenue from loans to SMEs and essentially businesses that will see very cutthroat competition on rates. So at Aberdeen, of course, we will continue to maintain our underweight position in financials. But at the same time, I think it is important to keep in mind that it is important to be invested in quality companies that will do well no matter what.
Okay, then I think for investors, do you have any suggestion how to allocate asset now? I mean, like if you're using a negative interest rate, this kind of situation.
Right. Well, in our case, we are invested in equities, and we are invested in Japanese equities. That's the team that I'm part of. We are of the view that this negative interest rate policy will be here at least in the near term, as the Bank of Japan continues to ease its monetary policy so that it could spur lending in Japan. I think what's important, though, is that investors continue to focus on companies with robust balance sheets, strong cash flows, and good profitability, managed by essentially executives that will work for the interests of minority shareholders. Those are the types of quality companies that will do very well, even if there's negative interest rate policy, or even if there's financial stress in other parts of the world that may affect, say, the yen, for instance. So those are the types of companies that we look at, because essentially these are the types of companies that will continue to grow their earnings, and I think it'll help you from losing sleep over it at night.
Okay, so you mentioned about these kind of good companies. I think most of them, they are like overseas companies. And what about if the yen goes appreciation? How they can avoid it? Because I think it might affect the export industry in Japan, right?
Right. If the yen continues to appreciate from the current levels, it will probably have a negative impact on some exporters. If you take a look at what is in Aberdeen Japan's portfolio, and if you take a look at the top 10 holdings, quite a few of the names that we have in there, we have been invested in for more than 10 years. Now, if you look back the last 10 years, this is way before negative interest rate policy. This is before Prime Minister Abe. This is even before the Lehman crisis, which I'm sure we all remember. During that time, the yen has strengthened to, in the 70s, and it has gone right back up to 120s against the US dollar. The types of companies that we're invested in have been able to generate good margins in both situations. The reason being is because they've been able to provide a business that is far more superior to others, and has continued to manufacture and sell products that are very competitive at very low cost, and at the same time they are hedging, they have a natural hedge to the currency risks because they produce locally for local demand. All of that put together does allow for a much stronger business that is quite resilient to those type of macro headwinds.
Okay, then now I think for companies it's a low negative interest rate. For them, the capital is easy to get. Then do you expect like merger and acquisition, M&A will happen more and more in the future?
I think negative interest rates could potentially help expand M&A activities from Japanese companies to abroad. Having said that, I think the fundamental reason of Japanese companies needing to do acquisitions to grow overseas will not change even if there wasn't negative interest rate policy. The reason being is because Japan faces some structural issues about its economy. The demographic is shrinking, and of course there's the national debt problem that's currently going on. Just to give you an example, the government currently owns about $70,000 per person. That's how much debt the government has. So you put all that into perspective, the outlook may not be very bright. So I think a lot of Japanese companies are saying, let's try to find growth abroad and let's find it quickly. The way to do that is through M&A. However, we at Aberdeen, we currently manage Japan large cap and small cap portfolio. We tend to be invested in companies that, of course, have a leading market share position in Japan, but they also drive a substantial portion of their earnings abroad as well. They are well diversified, and being well diversified is very key in this type of environment where you are seeing different monetary policy measures in different markets, but at the same time different paces of growth. If you have a well-diversified portfolio, not just in terms of the products, but also in terms of the geography, I think you will do okay.
Okay, because we do see some bank in Japan, they do the overseas M&A, and they get the profit already. And now could you talk about the industry in Japan? Like any industry has the opportunity can grow very rapidly in the future. Well, in your opinion, in your side?
Well, we continue to look at specific companies rather than industries or themes, because you know, there are certain themes right now that are currently helping to grow the economy. Let's say, for instance, inbound demand. These are essentially visitors from China, Taiwan, Korea, Malaysia, that have increased in number because of the yen's depreciation, but also because of relaxation of visa requirements. Now that has helped to grow the amount of visitors coming into Japan. That's one theme. We see that as a positive contribution to the economy. However, we do have some questions about how sustainable it is. Let's say if the yen were to appreciate once again, or let's say, for instance, if there were any kind of geopolitical issues that could also affect that kind of demand. We would like to be invested in companies that won't see big fluctuations in its business and, of course, its stock price from such themes. So the types of companies that we're invested in are market leaders, so they have substantial market share, which gives them great pricing power. They are also very good in with the types of technology that they have. So they have great R&D teams that come up with the latest innovation and technology. So you know, a name that we have in our portfolio that stands out, like in that sense, is for instance FANUC, which makes industrial robots. They have been doing very well in terms of coming up with machine tools, but of course industrial robots. And at the same time, they continue to invest in the future. So the types of robots that they're coming up with now is called collaborative robots. It's essentially robots that could work alongside you or me at close distances without having to put up a fence. It is considered potentially the final frontier in factory automation, and they are probably one of the leading market leaders in this field.
Okay, thank you. Then many people, they might be doubt. Because as we know, the Japanese economy is has a depreciation for at least 2 decades. So some investor, they might a little bit confused. Why I need to invest in this market? Do you agree? Do you think they still have the investment value?
Well, if I didn't think there was any investment value, I couldn't do this job. But I think what is important to understand is that even in a market, even in a shrinking market like Japan, there are pockets of growth opportunities. And I think where we are invested in are companies that are, again, as I said, market leaders in Japan that continue to take market share, but at the same time, they are very good at cost cutting, which allows you to expand your margins even in a shrinking market. The other important part is that most of the companies that we're invested in are Japanese companies with a very big global footprint. You know, some of the names that we have in our portfolio are the likes of, say, power tool maker Makita, or say air conditioning maker Daikin. Both of those companies we hold in the large cap portfolio, and they make more than 75% of their revenues abroad. So as much as the home market is important, of course, that's where they got their roots from. For them, expanding into international markets is equally, if not more important.
Okay, then maybe compare to the other development market, like US, like Europe. Then why the investor they need to invest in Japan? What is the niche of the Japanese stock market, and do you have any investment strategies?
Right. I would understand that, you know, we've seen all the headlines about Japan, as I mentioned earlier. They're very negative. The outlook might be somewhat bleak. But do keep in mind that Japan is home to some of the world's leading industry leaders and the top tier manufacturers of the world. At the same time, they have very good balance sheets, very strong balance sheets, which has recovered quite markedly since the bursting of the bubble. And so we've seen quite an increase in the amount of cash holdings within the balance sheet, which means that even in tough times, like now, when there's considerable financial stress around the world, the company can continue to invest in its own business and grow market share globally. Now, this is also important in the sense that right now there's a very important trend going on right now in Japan of improving corporate governance. We at Aberdeen, we pay close attention to governance and how we would like to be invested in companies run by management who will work for the best interests of minority shareholders. As a result, in the last 2 to 3 years, one of the successes of Abenomics, there aren't that many, but there is one, has been improvement in corporate governance. And as a result, we have seen a great increase in the amount of dividends and share buybacks. This is because there's a lot of cash on the balance sheet, and the company's management have finally come to realize that they don't need that much cash. They can pay that out. And of course, continue to invest in its own business. Essentially, they are more efficiently managing their balance sheets. And we like to see that, and we're continuing to see that trend. I think that is at least one example of a positive that comes out of investing in Japan.
Okay, then could you talk about your investment strategies? Like any advice to tell our investors what's your strategies?
Right.
Yeah, to invest.
At Aberdeen, we have a certain set of investment process standards that we adhere to globally. So the investment process that we follow in Tokyo is the same as what my colleagues do in Singapore and what my colleagues in London and Philadelphia do. We follow the same rules. Now, why that is important, I'll get to in a moment, but what we look at is, first of all, the quality of the company. We look at the strength of the financials, so the good balance sheet, strong cash flows, good income statement in terms of profitability, and we look at that over the 5 to 10 years. We then take a look at the management. Who's running this company? Are they willing to work for the interests of minority shareholders?
Do you meet the boss in person?
We always meet management before we invest. And we make a point of that because essentially if you don't meet them, how do we know who's actually running this company? It's very difficult.
Yeah.
And then, of course, we will take a look at other important factors, such as, for instance, its growth strategy. So in the mid to long term, is the company's growth strategy, is the target achievable? What has been the past track record as well? Has the company been able to achieve its targets in the past? These are very important factors. And then, of course, what kind of shareholder returns there are, etc. So these are sort of the quality tests that we have. Once it passes that, and we say, yes, the quality is there, we'll look at the valuations.
Okay.
I don't think investors, well, at least we don't. We don't use very sophisticated valuation metrics. We'll look at PE, we'll look at EBITDA. But the most important part is that we are flexible in our approach. If it's a bank, we'll be looking at ROE, price to book.
ROE,
yes.
Yeah.
And then if it's a real estate company, we'll look at price to RNAV, right?
Okay.
And by doing that, you take a flexible but an objective view of each stock.
Okay.
And if the Q is there and if the valuation is attractive, then as bottom-up stock pickers, we find that there's value to be had and we'll initiate on the stock, which means we'll invest in it. At Aberdeen, what makes us unique in one other area is that we follow this standard globally, which means that we have a great set of data across companies around the world. And as a result, what we're able to do is when we look at, say, one company in Japan, we have the same sort of data of its competitors around the world. We also have a great set of data of how the company that we're looking at will be going up against other competitors in other markets, and also in terms of how it has performed over the years. And we have years of data. So I think it's important to take a very close look in terms of due diligence over a long period of time.
What about the consumer tax? We got the information because, as we know, the consumer tax will increase in 2017 April. Then it will affect the Japanese stock market. I mean, for maybe not short term, maybe for long term. What do you think about the tax?
Yes. Currently, at the moment, the Japanese government, by law, will have to raise the consumption tax from 8% to 10% in April of next year. Now, this is the second time this administration has raised. This will be the second time. The first time happened in April 2014 when it was raised from 5% to 8%. When that happened, so back in April 2014, there was a very strong amount of demand leading up to it, and then demand fell after the tax hike.
Okay.
The government had predicted this will happen, and so did the rest of the market. But I think where the result, the outcome was different, was how long it took to recover, and it took quite a while longer than anybody had anticipated.
Okay.
Now, it is possible that the same thing will happen, and it is most likely that consumption will get weaker as a result, which is why currently at the moment there is debate amongst government officials to possibly postpone the tax hike. It's not made official, but it is something that is being considered. And if that is the case, then the Prime Minister will have to call a general snap election at the same time as the upper house election this summer. We as Aberdeen are not that concerned. Of course, we would like to see consumption pick up, but we are invested in companies that should do okay no matter what. And I'll give you an example. The name is 7&i Holdings. I think most people may know them as 7-Eleven, the convenience stores.
It's in your...
yes, it's in our top 10.
Top 10,
yes.
yeah.
So 7&i Holdings operates Japan's biggest chain of 7-Eleven convenience stores, has the top market share, but also 7-Eleven stores make the most money out of all convenience stores versus Lawson and Family Mart. One of the reasons why it can do that is because it produces great private branded goods at low cost, but at the same time the quality is very high. So people like you and I, if we're shopping at a convenience store in Japan and we have 100 yen to spend, many people would choose to go to 7-Eleven because the products are that much better. And as a result, same-store sales have continued to be positive. When the tax hike happened last time, all convenience stores did see a temporary period of weakness. Having said that, Seven & I Holdings was one of the first ones to see a recovery, and it was able to maintain that recovery faster and more stronger than any of its competitors. I think this is the type of environment, and a tax hike like that will probably give an opportunity like Seven & I to continue to grow sustainably over the long term.
Right. Then, and what about the Japanese yen? Because the volatility is quite great. Then which tool do you suggest, like Taiwanese investor or any investor to use for the currency hedge?
Of course, there's various instruments that you could use, financial product instruments that you could use to hedge the currency. We at Aberdeen, we tend to avoid too many of those. Having said that, we are invested in companies that do have a natural hedge to the currency. Might not be perfect, but if you take a look at our long-term performance, we have been invested in all sorts of exporters, but they have continued to do well because they manufacture locally for local demand. Hence, you get that natural hedge, right? In addition to that, they're very well diversified. So, they sell in markets like the U.S. They would be selling in Europe, Latin America, different parts of Asia. So, being well diversified, but also investing in companies that are able to have a good manufacturing, well-diversified manufacturing base. These are very key traits of a company that you should be looking at if you want to hedge yourself against the currency volatility.
Okay. So then so far, do you think Abenomics is successful?
It's a question that I get a lot from our clients. And I think there are maybe two success stories that came out of Abenomics. One is, as I mentioned before, one is about corporate governance. The other is the inbound demand that has grown as a result of the weak yen and visa restriction relaxation. But apart from those, we have maintained from quite early on that the potential outcome of Abenomics is questionable. And we look back now and we feel that perhaps not all of the targets have been met, especially the third arrow, which is on structural reform. We still think that there's a lot of work to be done. If you live in Japan, I think it'll be quite obvious, but there are labor law issues with regards to, say, also immigration. Despite the shrinking demographic, we still don't have enough foreign workers working in Japan. The other issue is, of course, that it is still very difficult for female workers, once they are married and they have a child, to come back into the labor force. We need to address those issues much quicker. Mr. Abe has come up with a set of new arrows that is hopefully trying to address that, but the issue is really on the specifics, and really the specifics on how different government ministries are going to work together as a unit to try to achieve that target. We have some questions on that front as well. So I think it's a mixed bag of results for Abenomics.
Okay. My final question: what do you think about the Sharp and Hon Hai? This case reflect the Japanese government maybe between the protect Japanese industry and the best way out for the enterprise. Then how to find the balance between this dilemma? Then from your side, do you think it's benefit for Sharp?
I think when we first heard about the Sharp Hon Hai decision, and then we subsequently heard about the potential from, say, state-backed sponsors to potentially help Sharp, it wasn't, from us, we didn't think it was a question. We knew that Hon Hai, the price was much better, of course, and of course there are other issues, but Hon Hai was most likely going to be the winner of the bid. Now, the reason why in this case it could make sense is because, well, on the one hand, Hon Hai needs OLED technology. Sharp has that. Hon Hai needs the brand. Sharp has that. And to be able to get a hold of that, it's a very quick way to acquire that in this method.
Yep.
But we would probably need to look at this in a little bit more detail. But at the end of the day, Hon Hai's Mr. Terry Guo, who made the decision to acquire Sharp, he is one of the world's foremost business leaders. I don't think he would make a brash decision of an M&A of this scale. He's also very quick in his decision making. What he does in one day probably will take Sharp maybe a month to do. So it is quite likely that he has some good ideas. It just needs to come out and be properly explained. And once done, it is hoped that Sharp will be able to turn around its business in the mid to long term. I think this kind of a transaction where a foreign firm will acquire Japanese assets is actually more rare, but it will likely happen more and more as Japan continues to find succession issues with old chief executives that are retiring with no one to pass on the business, and we are already seeing that happening as we speak. So we have been seeing Japanese companies go abroad and acquire companies. We are at an age and world right now where the reverse can absolutely happen, and I think it will only be natural from here onwards that Japanese companies will also be a target of acquisitions.
Okay, thank you, Kay. Then we hope this strategy and suggestion will be really, really helpful. And thank you, Kay.
Thank you very much.
Thank you.